Every business owner, from the one running a small coffee shop to the founder of a fast-growing tech startup, eventually hits a wall. It is not a wall made of bricks, but one made of spreadsheets, receipts, and tax forms. This is the moment you realize you are spending more time managing your money than making it. You start asking a critical question, often quietly to yourself late at night. Should I outsource my accounting? This decision feels huge because it is. It is about more than just numbers. It is about control, trust, and the future direction of your company. The answer is not a simple yes or no. The pressure to make the right choice is immense. You hear success stories from other entrepreneurs who offloaded their bookkeeping and suddenly found the freedom to double their revenue. You also hear whispered warnings about firms that made costly errors or were impossible to reach during a crisis. The truth is, accounting is the financial nervous system of your business. It tells you where you have been, where you are now, and where you are going. Handing over control of this system to an outside party is a significant leap of faith, one that requires careful consideration and a clear understanding of what you stand to gain and what you risk losing. Many business owners delay this decision because they are overwhelmed by the options and the jargon. They see it as a complex problem reserved for bigger companies with bigger budgets. But the reality is that the question of outsourcing is more relevant to small and medium businesses than anyone else. You have limited resources. Every hour you spend trying to decipher a tax code is an hour you are not spending on product development, customer service, or sales. The core of this dilemma is a trade-off between your time, your money, and your direct control over the financial pulse of your enterprise. This guide will not give you a one-size-fits-all answer. Instead, it will give you a framework. We will break down the real pros and cons, moving beyond the simplistic sales pitches. We will provide you with the tools to analyze your own business needs honestly. The goal is to demystify the process and empower you to make a calculated decision, not a desperate one. By the end, you will have a clear path forward, whether that means hiring an external firm, keeping your accounting in-house, or exploring a hybrid solution that gives you the best of both worlds. The most powerful argument for outsourcing your accounting is the immediate return of your most valuable asset, time. As a business owner, your time is a finite resource with infinite demands. Think about it. Last week, how many hours did you spend on tasks like categorizing expenses, chasing invoices, preparing payroll? Now imagine you could buy all those hours back. What could you do with that reclaimed time? Launching a new marketing campaign, training your team, developing that new product line. Consider this simple scenario. A marketing agency owner spends about 10 hours every week managing her company's finances. She is not an accountant, so the work is slow and stressful. She hires an outsourced accounting service for a flat monthly fee. Instantly, she gains 40 hours a month. She uses that time to personally connect with her top 5 clients, 2 major contract renewals, and a significant new project result. The revenue from that single new project more than covers the entire annual cost of the accounting service. This is not just about convenience, it is a direct investment in growth, powered by the leverage of your own time. Beyond time, outsourcing provides immediate access to a level of expertise that is often prohibitively expensive to hire in-house. A single bookkeeper might know the basics, but an established accounting firm brings a team of specialists to the table: tax strategists, compliance experts, financial analysts. They live and breathe financial regulations and tax law changes. They know the specific deductions and credits applicable to your industry, things you would likely never discover on your own. This expertise acts as a powerful defense against costly mistakes, audits, and compliance penalties. You gain enterprise-level tools, sophisticated software, secure data systems, streamlined reporting, without the enterprise-level price tag. The result? More accurate reporting, better insights, operational efficiency, and a smarter way to make decisions. The first and most visceral drawback of outsourcing is the perceived loss of control. When your records are in-house, you can ask anything, anytime. With an external firm, that immediacy vanishes. You are now reliant on their reporting schedule and responsiveness. In time-sensitive moments, waiting can feel like flying blind. Loss of control links to data security. Your financial data is your most sensitive information. Sending it outside introduces risk. Reputable firms mitigate it, but the risk is never zero. A breach on their end becomes your nightmare. Financial loss, reputational damage, legal liabilities. Then there are hidden costs. Low flat fees often hide limits and surcharges. Need special reports? Extra. Exceed transaction caps? Surcharge. Small fees add up fast. Without careful vetting, cost effectiveness can be an illusion. Communication gaps create friction. Your outsourced team is not inside your meetings. Context gets lost. Small coding mistakes can skew your reports and decisions. Fix it with structure, regular meetings, clear documentation, aligned time zones, defined SLAs. Making the decision is not emotional, it is analysis. Use a simple, honest checklist. Low volume, simple ops can stay in-house. High volume or complexity favors specialists. Run the math, then choose.